I've been auditing PHAs for over 20 years. I also consult with public housing authorities on their RAD program, if they're adopting the MTW program, that's the Move to Work program, and HUD's Rental Assistance Demonstration program. And also we consult general accounting and auditing matters with a lot of our PHA clients. Our audit process will usually start once a public housing authority files its unaudited financial statements with HUD's Real Estate Assessment Center, and that's required to happen within 60 days of its fiscal year end. And the time it takes to complete an audit varies with the size of a PHA. It depends on the number of federal programs that it has, and of course the amount of cooperation that we receive from PHA staff. I'd say typically our typical PHA audit will take about 45 to 75 days to complete. Housing authorities are required to file unaudited financial statements at least 60 days subsequent to their year end. So, that could be quite an undertaking because, PHAs now have a lot of affiliate entities that they have to roll up into the primary housing authority, the primary government. A lot of them are involved in HUD's Rental Assistance Demonstration Program. So there's tax credit entities out there that get rolled up. There's general partner entities. They have management companies. They have development entities. So it can be quite a burden to get those unaudited financial statements submitted timely to HUD within 60 days and accurately. So that's one. And then also within 9 months, they're required to have their audit complete and submitted to HUD. So those are HUD reporting requirements. As I mentioned before, the states may have reporting requirements. Also, the Federal Audit Clearinghouse has an audit reporting requirement. So there's a lot of requirements out there that PHAs have to comply with. PHAs are holding companies, they're real estate investors, they're management companies, they're developers. And they have to have that financial expertise in-house to do all this. In my experience, the most common fraud is with tenant rent collections at remote sites where employees take tenant rent payments, whether it be cash or checks, and pocket it. And this fraud occurs when employees are able to adjust that tenant accounts receivable report to reflect payment or to write off the rent amount owed. They go in the system and they can make adjustments to what a tenant owes, basically. So in all of our PHA audits, we will do a rent reasonableness test and a rent analysis. So we will get a rent roll from the client, and we will project, because of a monthly rent roll. So we may ask for like the December rent, and you'll see what is expected on the roll. And then we can do an analysis then to see what actually was collected and what was earned. And we compare the rent roll to what they reported. And if there's variances, we go back and investigate it, and we inquire of the client, hey, we expected to see $5,000 in rent this month. You only collected $3,500. What's the difference? This type of fraud can easily be prevented through a few easy controls. First of all, we always recommend that employees taking rent payments should not be able to adjust tenant accounts. That is a no-no. You can have them record receipt of the payment, but they should only have account query responsibilities only. That is, they can look up how much the tenant owes, their history of payments, but they should not ever be able to take the payment and then adjust the account. Also, that employee, the accounting system should provide a computer-generated receipt always for the tenant. And I always tell clients, you should have a sign right in your lobby, right where they're taking the payment, stating that tenants not receiving a receipt should call a particular number, which is finance. Copy of the deposit slip and checks received should be provided daily to the finance department for recording and reconciliation. Um, and then lastly, which most housing authorities do, but tenant statements should be mailed out or emailed at least monthly by the finance department so that, you know what, a tenant can see, hey, I'm late on a payment. I paid that. I paid that 4 days ago and they're still showing that I owe it. So things like this, um, you know, you may not be able to do all four of those points, but any 1, 2, 3 of those will really, really help you prevent fraud as it relates to rent collection. People are always focused on the cash, and we have controls over the money going out. We need 2 signatures on a check. We sign the invoice coming in, cash receipts, and grant money comes automatically into an account. But what about all those things you're purchasing? Housing authorities have millions and millions of dollars of equity tied up in buildings, in inventory, in equipment, and that's really what you need to control. The thing is with internal finance and accounting fraud, generally there needs to be collusion under a few individuals because the accounting function generally has more oversight and segregation of duty than other functions. So it's not as pervasive as people may think. Recently, we've seen more employee fraud with employees who have custody over physical assets, specifically laptops, iPhones, and other types of electronic equipment. Think about this. If you're a public housing authority ED listening to this, how hard is it for your IT supervisor to order a couple extra iPhones or laptops and sell them personally? Do you have control over that process? So we always recommend that capital assets over a specified value be tagged and tracked by someone independent of the purchasing process. We also recommend surprise counts by that person to verify equipment is still on hand and in use. I'll give you another example. If you're listening to this, if you're a PHA executive, what about your maintenance supervisor who's in charge of a rehab of a building, of one of your public housing sites? How certain are you that he's not over-ordering lumber, over-ordering fixtures, over-ordering equipment? As an executive director, you may not have that expertise. And so if someone's ordering 3 pallets of lumber when they should be ordering 2, how will you catch that? Do you have control over that process? For us, we always say, hey, someone independent of that maintenance process and that maintenance department should, with some construction expertise, review and sign off on some POs. So they see the order that comes through. So maybe you have a construction manager that you use as a consultant that is an independent contractor. He comes in and he can review and sign off on purchase orders and say, hey, that's right. This pallet is in accordance with the blueprints. It's in accordance with our budget. And speaking of budgets, we always say, hey, maintain strict budget controls. If a line item is over budget, you want to jump into it and understand why. Did the prices just go up, or did they have to order more quantity? And if they had to order more quantity, that's something you always need to look into. Why? Was our original estimate off, or is there something else going on there? Size definitely does not matter when it comes to PHAs. What really matters most, I think, in all my years is the tone at the top. And what I mean by that is the example set by the PHA's Board of Commissioners and Executive Director. Organizations that make fraud prevention part of their regular meetings and provide employees with a mechanism to report fraud anonymously have the least amount of fraud. My experience is that most PHA employees have incredible amount of pride in their work. They believe in the PHA's mission. So if they see fraud, they will report it. Only though, if it is encouraged by management to do so and the employees can do it anonymously and without any repercussions, because it's a tough thing to do, to report your coworker, to report your supervisor. And if they think they're going to lose their job over it, they're not going to do it. But if you give an employee a mechanism to report fraud and say, it's encouraged. We want to hear from you. If you see something, let us know. And if they can do it anonymously without any repercussions, they will do it. That is my experience. If management sets the right tone, they educate employees about fraud, stress to employees that any fraud will not be tolerated, then an atmosphere of fraud and employees justifying fraud, won't exist if management is constantly harping on it. And we see that in fraud where employees will say, they don't care. Hey, it's only a couple $100. What do they care? I don't get paid enough money, or something like that will be pervasive through an organization, and without that management setting the right tone at the top. We see that a lot. You have these very small housing authorities on very tight budgets, and yeah, they'd love to have a proper segregation of duties where one person does this, another person does this, but they just can't afford it. And it could be a simple fix. A lot of times we'll say, hey, how about you incorporate a board member, an executive director, someone outside the bookkeeping process. um, you incorporate them into the process. Just for instance, you know, um, we'll recommend that, the bank statements don't go to the bookkeeper. They go directly to a third party, maybe the executive director. And the executive director will open the bank statement, thumb through all the checks, make sure there's proper signatures on those checks, make sure there's proper endorsements on those checks, make sure it agrees to the check register that was approved at the board meeting. Something like that may only take 25, 30 minutes in a month. And but more importantly, it lets people know, number one, someone's checking, and then also someone is, performing that control function. So anytime there's a small bookkeeping department, we will always try to bring in people outside the department, just to do something very quick like that, but that adds a whole layer of control. That is the million dollar question. And my answer always is, it really depends on the fraud and who's involved. And as an auditor, I have found fraud where both the Board of Commissioners, and the ED participated in the fraud. So my obligation as an auditor when I found it was to go to the next level up, which was the local prosecutor and the HUD field office. Um, but in general, though, I always will tell an authority, you need to conduct a thorough investigation of the fraud, either by contracting with your auditor, maybe your attorney, or investigating it internally. And then you need to assess that level of loss. Is it, is it a big, or is it just a tool that vanished? And then proceed accordingly, because you may have to involve the police. You may have to involve HUD IG, but you don't want to do that until you really know what the extent of the fraud. And you have to remember, employee rights need to be protected. And so that's why I always like to have the attorneys involved, the PHA attorney involved, just to protect the housing authority from trampling on employee rights and resulting in a lawsuit or something to that effect. Because you don't want to go accusing anybody, you don't want to trample on employee rights, and so forth. In no circumstances should an employee provide their password to another employee, or have that password easily accessible to other employees. I can't tell you how many times I'm at a client's office and I see sticky notes on monitors with passwords written on it. I mean, that just invites fraud. And big picture, Well, when employees utilize another employee's password, it really overrides the established system of internal control. I mean, passwords are set up for one person to be able to access one area of the computer system, and another person has another password and they access another part of the computer system. So if that's overridden, that's that can invite fraud. And you know, in big picture, if an employee needs your password to perform their job, then there is a problem inherently with that employee's job responsibilities. That is, they shouldn't be doing what they're doing, and that's as clear as that. Whether, a lot of times that employee's job has evolved over time, and they're like, it's just as easy for me to do it. Give me your password. Well, that's overriding the system of internal control, and that's not how it was intended to be processed. That function. So, in no circumstance should you be given your password, and you need to protect that and change it routinely. We see a lot of hackers getting into systems because passwords aren't protected and employees are answering emails or using computers to go into sites, when they're looking at the news or on Facebook and things like that. Um, you know, we've I've seen issues where payroll clerks have gone to log in to do payroll, and a notice will come up, oh, the bank system's down, and they shut the computer. They'll go in a couple hours later, say the bank system is down. They'll pick up the phone and call the bank and say, I have to do payroll. Your system's down, and the bank's like, well, no, our system's not down. It's fine. And so what happened is someone got into the system, the housing authorities payroll system, and was able to transfer funds out while the payroll clerk had this notice that the system was down, and they lost a few $100,000. And those type of frauds are becoming more prevalent. The scams and the hackers, and you really need to be diligent and not answering emails that look like phishing, not going to websites on your PHA computer, and so forth.